Welcome back, financial enthusiasts. Today we have an exciting opportunity to discuss, one that will surely make your investment senses tingle. Interest rates might be on the move again, this time down. It'll happen in 2024, nearly definitely, and this presents us with a huge opportunity. It starts now, but don't get greedy. By the end of this video, we will have talked about this dynamic that has, for the last 15 years, printed money, and one particular stock that serves as an absolutely brilliant example. But as I say, don't get greedy. Before we dive in, make sure to hit the subscribe button, ring that notification bell, and make sure you never miss out on these important market insights. Now, let's get started. Picture this: a group of funds that not only offer double-digit yields, but also trade currently at significant discounts. Intrigued? Well, stay tuned, because we've got a ticker that'll make your portfolio smile, throwing off a juicy 10% dividend, paid monthly. But before we reveal this amazing ticker, let's explore the fascinating world of bonds. As discussed, because we were here last year, both stocks and bonds took a massive hit, challenging that traditional narrative of a 60-40 split for your retirement portfolio. Bond prices plunged, sending yields soaring until they hit the crucial 4% mark. That has been a clear buy signal in the past. Whenever bond prices surged in the past 15 years, that 4% lid has held relatively strong. It sends yields lower and prices higher. In recent years, we have witnessed the resilience of bonds when rates fall. And now, with interest rates possibly topping out again, the opportunity to capitalize on falling rates and rising bond prices could be on us. Now, let's fast forward to today. The yield on the 10-year Treasury is about 3.4%, still below that 4% lid. But guess what? Rates are possibly topping out again, despite the Fed's talk of potential hikes dependent on the data that comes in. We are also definitely at the end of this hiking cycle. We're facing economic challenges, a banking crisis, and there's the potential for a recession within the next few months to year, which would have a big impact on interest rates and therefore bond prices. This means that bond yields potentially could fall further, and the upside potential in terms of prices might just be getting started. The 2-year Treasury bond, which we talk about on this show often, has a yield which shows a remarkable track record of predicting the Fed's next move. So we look at the yield on the 2-year Treasury bond, and we have potential heads up on what's coming with regards to Fed rate decisions, as shown in this chart here. Lower rates means higher bond prices, and this is where our opportunity lies. What would we buy then? ETFs like iShares 20-year plus Treasury bond, TLT, still an attractive option, current yield of 2.8%. A truer measure might be the 30-day SEC yield, which is printing at around 3.7% on TLT. However, for those seeking even greater bargains, it's maybe time to turn your attention to closed-end funds. These funds offer a range of benefits, including attractive yields, and they trade at discounts to their net asset values currently, many of them. One compelling example is the Double Line Income Solutions Fund, which currently yields an impressive 10% and trades at a discount to its net asset value. These discounts could offer you additional value and income potential if you're a savvy investor and get in at the right time. Put all of this together and the opportunity becomes quite clear in front of us. As we anticipate further drops in the bond yields, we can expect prices to rise. It's worth considering CEFs, closed-end funds like DLY, managed by experienced professionals who have insights and connections in the bond market, and they have access to new bond issues. Big up you've got there in terms of computer traded ETF funds or those that move on quant formulas alone. And that is our opportunity. DLY keeping an eye on TLT and looking for the price of bonds to rise as the yield decreases. Along with those particular tickers, this could have wide implications for the rest of your trades, so pay attention. Keep an eye on those charts that I flashed up behind me, and if you've got any questions, feel free to ask. This wraps up a thrilling investment insight. Remember, folks, interest rates are potentially topping out. The time for seizing bond yields at a bargain could be coming soon, maybe even in advance of 2024. Don't miss out on this opportunity. Manage your risk. And as always, please give this video a thumbs up, share it with your fellow investors, and leave your comments and questions below. I love to read them. I'll respond to all of them. And it's great to have you here supporting the show.